Hi guys, it's your boy Ofentse Ledwaba once again. I know I've been gone for long. Welcome to my YouTube channel, and I'll be bringing much bigger and better value. I've just been going through the charts and also been on vacation as well. So now I'll be giving you guys much more valuable knowledge that you have never seen before. And today I'll be discussing a major topic that can influence your trading. Many people tend to say that you will be profitable in over a year or over 3 months. I'll just be showing you how you can be profitable by following these rules and tactics. First and foremost, please do not forget to like and subscribe. The number one thing that you need to know is that you need to know your character as a human being. As growing up, were you the person that was always doing things fast, or you took time to analyze it? And are you patient enough to place a trade on Monday and take your profit on Thursday? Or you are that person that just wants to trade now and get it done over with, which is you can be a scalper or intraday trader, meaning that you can be able to take your trades the same day and most of the time be able to take your profit the same day. Unlike a swing trader will be a trader that will be able to take longer term trades. You can take a trade on Monday and possibly gain much more bigger profits and take your profits on Thursday or even the following week. That helps you become more patient and be able to understand that you'll be able to hold a little bit of drawdowns along the days of the week, but knowing that you'll be targeting bigger amount of pips. That, for instance, helps you be able to take a trade at the beginning or at the best entry, and you are not forced to even trade on daily basis. That will definitely help you become a constant trader, as you know that you'll be taking trades based on the entry levels that you spot. You'll become a much sniper trader. By being a sniper trader, I'm simply meaning that you wait for your entries to come at the point whereby you initially placed your analysis. Second point will be use both analysis. By me saying use both analysis, which simply means that you need to be a sentimental trader. You need to understand what is happening on the fundamental side and also analyzing a technical form. As you know that we are technical traders, but we don't deviate or do away with the fundamental. We always know what's coming. For example, you'll be taking trades during a big event, but not knowing that it's a big event, and you find out the trade goes against you. You need to know why the trade went against you. Or foremost, if you want to take a trade, you need to understand that okay, there's big news coming up, we might have a bigger volatility. That's one thing that you need to understand. The news, the fundamentals create volatility, they don't create direction. The technical create the direction. So you might see a trade passing through your support level and then coming back again. That will be a fundamental news reaction, the volatility. But you do know that the bigger movement is to go bullish, but you see it breaking down the support and coming back up and closing above the support. That simply means that they were just kicking out the sellers. They were inducing people to keep on selling, then they come back and follow the technical, which is the bigger movement, the direction. That foremost, you would know that in that specific form, you would know that okay, Biden is giving a speech, or we have non-farm payrolls being released, which is NFP. That will give you much more information not to get trapped in certain moves. As we say, they're market maker moves. You understand? Those are stop loss hunts. That way you'll be able to understand, okay, if you are taking this trade right now, you need to little bit give it a bit of a room so that you don't be caught within that volatility movement. Number 3, you need to know the bigger picture. You need to know the bigger picture. In Forex, you start from what we call a reverse pyramid. As you know, the reverse pyramid, it's like this. You start from the higher time frame going down to a lower time frame. What I mean by that, you need to analyze bigger picture first. That will certainly give you the bigger direction of where the market is going. You cannot know the bigger picture starting from the bottom. Understand? From the reverse pyramid. No, a reverse pyramid is like this. It's like a triangle. Maybe I can find something. What can I use? I need some sort of. This will work, but will not. Let me get something quickly. Okay, just need to show you guys the reverse pyramid. Do you know? Something like this. Yes, a reverse pyramid. So basically, you know that this is the higher time frame. Time frame, lower time frame. So it's basically something like this. You will analyze from the top, knowing that you are starting from a weekly, daily, and 4 hour. Weekly, daily, 4 hour. Each one and 30. So basically you start from, which is the higher time frame will be your weekly, daily, and 1 hour and 4 hours. Sorry about that. And then your lower time frame will be, you can deviate it and say you're starting from 1 hour. Anything from 1 hour going downwards will be your lower time frame. Anything from 1 hour going upwards will be your higher time frame. I'm sure it's understood that way. So your H1 going down, M30, M15, M5 will be your lower time frame, and then your H1 going up, which is your 4 hour, daily, weekly, monthly, will be your higher time frame. That way you are able to see the bigger picture of where the market direction is taking you. You are able to understand and be able to take moves that will at most give you a big risk reward ratio, because we know that the market is being bullish from January, and then it has not shown any signs of going bearish. So we're still continuing the bullish move, which you will get that information from a higher time frame. Number 4, your risk reward ratio. Risk management is the most important factor, as I've seen in my experience and also teaching people, mentoring people. I've seen that many people, they don't have much important targets. Their targets are not realistic. They are actually much bigger than their deposit or their account size. Someone will deposit $100, but then their target will be $10,000. It's not realistic. You need to understand that you need to make profits before you can at most target bigger profits. Small profits are still profits. I don't know why many people, whenever they make $2, they are ashamed of it, but whenever they make $50, $100, then they post it. You need to understand, move away from the social media fame, understand why you started to trade, to understand why you need this thing. Put in the work. You need to understand the minute you put in the work, everything will fall into place. Your risk management, you know that, okay, I'm risking 2-3% and my target is 10%. Doing that continuously, you will eventually see change. Your account will grow, because it simply means that, Whenever you win, you're winning 10%, but when you lose, you lose 3%. So that means from the previous trade that you won, you still 7% up. You understand? So you need to find a way to understand that your target and another person's target won't be the same. Focus on your own craft, focus on your own account, set your realistic goals, because by you not setting realistic goals, that's when you start now putting big lots, not taking into account that you're risking more than 50% of your account size. Here's a trick that I mostly use on small accounts. You know what I do? I'll deposit now. When I do a challenge, I deposit $100. Once I deposit the $100, I will double the account. Once I double the account, I withdraw my initial deposit. So now I know that, okay, my account now is $200. I withdraw my first $100. Now emotions are no longer attached. I have my own money. I'm only risking profit. That's when now I can start to push now and risk 30% of my account, knowing that very well that I am now risking the profits, not my initial deposit. That in my mind, it's set free and I'm trading freely without no emotion attached, because my money is back into my bank account. The money that I'm risking now, I'm risking the profits. Hence, I'm able to capitalize and put in big lots and know that way I am able to triple it again, not being emotionally attached. But if my money is in the account, I get emotionally attached. The fifth rule: sharpen your skills. You will not be a better trader if you stop trading. You need to take breaks, but don't completely stop. You need to understand that you will face challenges. You will face challenges that will force you to give up, but don't give up. Rather take a break from the charts and then come back strong. You need to put in the work, practice. You cannot be a better trader if you don't practice. With forex trading, it simply means that the theory can be introduced into the mind, but how you apply the theory is what makes you a better trader. How you take your trades is how you're going to be a better trader. Learn to trade so that you can be able to become a better trader and spot your mistakes. Trade as much as possible, but take into account that don't overtrade. You understand? Don't overtrade in the sense that when I mean trade as much as possible, you can analyze but not trade. Search how you can be able to spot the moves, and also make sure that you are not emotionally attached to the chart, because you need to be patient. Also, by you being patient, you get to understand that the market always gives you better opportunities. You miss this opportunity, another one is coming. You miss this one, another one is coming. So if you are not psychologically prepared, that's why many people tend to lose in forex. They are not psychologically prepared. They want the money now. They get rich quick money now. So the utmost strategy of winning is in your mind. Forex is 80% psychology and 20% trading. You need to know whenever you get into trades, don't ever get into the trades when you are stressed. Make sure you are fully ready and your mind is at ease, and don't always overtrade just to fit in. Learn to set goals. Your goals will at most help you to achieve a certain level of greatness. You need to understand that within that period of you starting to trade, you will be able to understand and know the disadvantages of trading. And over trading will often lead to you being overstressed and also taking wrong trades. Please make sure, guys, you don't forget to like and subscribe, and also comment below. And if you like to use the broker that I'm using, please click on the link below and open with a validated broker that gives you withdrawals very quickly, and they are regulated internationally. Thank you guys for tuning into my channel. Please share, subscribe. I'm definitely sure some of your friends need this information. Also, go back to my other videos, you'll be able to see much more analysis about how I analyze. And also, if you'd like to join our course, the link is below. Please do not forget to catch me in my next video. Peace.